When it comes to investing, the world is your oyster. There are roughly 80 stock exchanges to choose from globally, many of which dwarf our stock exchange. But recent data shows of the millions of Aussies who invest in shares, only 16% hold international shares. Investing offshore can have many benefits, from greater diversification to lower portfolio risk and exposure to some of the world's best companies. So what's the best way to build international exposure into your portfolio? To find out, I'm joined by Jun Bei Liu, founder of TenCap. Jun Bei, good to see you.
Good to see you.
Most brokers offer the ability to invest in overseas markets. How come Australians haven't taken to it so much?
That's right, isn't it funny? But I tell you what, it's because we have this investor, especially retail investors, we have a home bias. So, which means we feel more familiar with our own home companies. For example, if I'm going to shop at Woolworth, I'm probably happy to hold the Woolworth shares. So, or the Commonwealth Bank, that which for many retail investors' portfolio. So it's the home bias and familiarity is a big reason. Now, the second one is that it's also more tax efficient when you get dividend, because Australian big, large blue chip companies pay you fully franked dividend, which means you get a tax benefit when you get a dividend income. If you invest in offshore shares, well, most of the time you don't buy it for dividend, but if you do, it's less tax efficient.
Right. Given all of that, does it pay off investing overseas?
Absolutely.
Right. Give us 3 stocks that you reckon, if we want to diversify overseas, that would be good ones to look at.
First one is Google, Alphabet. We all know what they do, the search engine. But in recent years, they really have invested a lot of money into AI and expanded into the cloud computing. They also partner with OpenAI, really built that infrastructure, and their advertising revenue has been growing really strongly as well. The company is not expensive. It's trading on something like 17 times earnings.
Stock number 2?
Stock number 2, again, is a defensive and growth name, which is Microsoft. Again, Microsoft really reinvented itself from a hardware computer business into a cloud computing business. And now also a partner, again, with OpenAI, invests billions of dollars. In fact, they invest something like $90 billion into the AI space.
All right, your third one. This is a controversial one?
This is a controversial one. And this is an easier one for investors who does have the home bias, which is Life 360. It's listed on the Australia Stock Exchange, but really it is a global growth business, and US is its biggest market. It provides tracking. It's a tracking business. In fact, it provides tracking or safety feature for family circles, and this one is continuing to dominate the sector in the US. So in fact, it has a monthly active user of 84 million people.
Wow.
84, and that's every month. And then this is higher than some of the social media businesses there in the US, and only a fraction of those people actually pay. So that growth is just essentially converting some of those subscribers to growth, massive amount of growth, and it's a one to have.
Well, 2 of my daughters are subscribers to it with their kids. So
that's right, the driving feature. They
swear by it. The first 2 stocks and Life 360, their focus is on the US. A lot of people getting out of the US market because of the Trump roller coaster. Should you still invest in the US, or is it better in Europe and the UK or in Asia?
So US is probably represent the highest opportunity for growth. So I think ultimately, after the current phase passes, when we have more stability in terms of the trade and the like, I do think that investors will move back into the US. But for now, there's been a lot of money actually moving into Australian market and the Europe market, and then Asia and China. In fact, so far the best performing stocks, tech stock, actually has been in China, because it's the Alibaba, it's the Tencent, because they just gotten too cheap. Now, the risk here is that you still need there's regulatory, there's policy shifts and the like, so you just got to be a little bit more careful in terms of where the policy might go and the like. So I think Australia actually looks great, but don't dismiss the US market. I think ultimately still going to be a hunting ground for growth companies.
Jun Bei Liu from TenCap, good to see you. Thanks for your time.
Thank you.